The US dollar index surged yesterday, largely driven by a sharp decline in the euro. The single European currency lost value, wind down by disappointing business activity data from Germany, France, and the euro area. Meanwhile, similar data from the United States was less discouraging. Although the American manufacturing sector contracted more than expected, the more flexible services sector showed signs of recovery. Now, markets are eagerly awaiting further data to refine their predictions regarding interest rate moves by leading central banks. Let's explore how the upcoming economic report scheduled for September 25 and 26 could affect the dynamics of a major currency pairs. You are watching Traders Calendar. The trading day in Australia will kick off with a monthly inflation report. Expectations suggest that the price growth will slow from a 3.5% to 2.8%. Given that the Reserve Bank of Australia's target band is between 2 and 3%, hitting this range would be a positive signal. Nevertheless, the Australian dollar is expected to suffer losses. Wednesday may bring further disappointment to the US dollar buyers, with the housing sector data set to be released. Forecasts predict a decline in new home sales to 0.7 million. Falling demand for homes signals a cooling economy, which in turn could reduce demand for the greenback. On a Wednesday, it will also be interesting to watch the Russian ruble's movement following the release of their industrial production growth report. Forecasts suggest a decline from a 3.3% to 2.4%, which could weaken the ruble and push the US-euro pair higher on the trading chart. Moving on to Thursday, Eurozone economic data will take center stage. A key report for the euro will be Germany's consumer confidence indicator. After a gloomy Monday marked by a decline in the business activity in Europe's largest economy, some relief may come midweek if the consumer confidence index improves from a -22 to -21.5 points. If the actual data is in line with the forecast, the European currency could gain value against the US dollar, while the US economy is showing more resilience compared to its overseas counterparts. This stability is uneven, which is reflected in the wildly fluctuating economic data. Thursday's report on the durable goods orders is expected to show a sharp drop from a 9.9% to -2.6%. If the forecast comes true, it could wane on the greenback and cause its further slide. However, the US dollar is not going to give up easily. On the same day, the US GDP report will be released, with economic growth expected to accelerate from a 1.4% to 3%. If the data confirms such a rapid pace of economic expansion, the dollar could find solid support and resume its rally. At the same time, it will be worth paying close attention to the inflation gauge, the GDP deflator. This indicator is closely watched by the Fed Reserve and could influence its future interest rate decisions. If inflation eases to the expected 2.5%, the US dollar could come under pressure, and the dollar slide may continue if data shows an increase in a weekly US jobless claims. With the end of the month approaching and the September jobs data looming, this weekly figure is gaining importance. A higher than expected number would signal further pressure on the greenback. In addition, Thursday's macroeconomic calendar includes speeches by around 10 Federal Reserve officials and several European monetary policymakers. Markets will be most keenly focused on the Fed Chairman Jerome Powell's remarks and the ECB President Christine Lagarde's statement. Please note that all times are set in a GMT +3. The next video review will be released on Thursday, September 26. See you! Please note that all times are set in a GMT +3. The next video review will be released on Thursday, September 26. See you!